Good morning. This is Dylan Giovanni Behind the Markets. Happy Wednesday. Today's Wednesday, June 24th. We are making it through the summer. I can't believe July is just in a few days. Anyway, today I'd like to answer a question I'm getting from a lot of our readers and members about the sell-off here. You know, what's going on with AI? And the gist of it is, why is AI getting hit? I mean, when you think about how important these hyperscalers are and how much they're building out, I mean, everyone can see that they're all going to need that. That's true. That is absolutely true. Over time, data centers will be the thing. Hyperscalers will be the thing. There's no doubt about it. Everybody understands that. But there are two things that are causing this sell-off. The first one is price. Okay, while everybody might need something, the question for a business that is investing a lot of money, the question is, what will the return on its investment be? And one of the words that have been going around lately, the last week or so, has been, it was kind of buried in the SpaceX IPO, but one of the things that's been going around is that a lot of S&P 500 companies are really being careful about the money they're spending on tokens, AI tokens, you know, basically AI queries, you know, using AI, for lack of a better word. So they're really really pushing back. And then you have Microsoft come out and say that their Copilot allows people to choose different models. You know, you want to use Claude, you want to use OpenAI. They're kind of agnostic so far about this, but they're coming out and saying a lot of our customers are really upset. Microsoft is saying this. A lot of our corporate customers who use Office AI are really upset with these bills. So we're thinking about offering cheaper alternative models. So again, what that does is it telegraphs to the market, to investors who are watching this carefully as we are here, that the returns might not be as big as the investment, this immense investment that's being made. You know, they might not be as big. You can make $100 billion investment, you know, when your prices for AI, for these tokens, for everything are really, you know, we'll say, for lack of a better word, $100 a token, just hypothetically. You can make $100 billion investment, but when the money you could make selling the AI service starts to go down, these tokens, this usage, when that starts to go down, what that does is it says to the people making the investment, are you sure you want to make this kind of a big investment? You know, it really starts to make the math change a little bit. And that's what's happening right now. We're in one of those pause, reflective, digest modes in the market, which I'm going to talk about in a second. The other thing that's causing these stocks to go down is just the supply on the market. We all know SpaceX was a big, as I talked about many times on this channel, greatest marketing shtick I've ever seen, you know, promotion for a company going public, and that's been kind of euphoric and all these other things. But there are a lot of companies issuing stock and debt. And I think with SpaceX, usually with an IPO, company goes public, and that's like the end of the fundraising journey. But I think with SpaceX, especially with their bond offering, et cetera, you start to see that maybe the IPO is the beginning of a fundraising journey where they're going to have to issue debt and stock at regular intervals, which of course will put pressure on the price of the stock as more shares are issued and it gets diluted. But you're seeing the same thing happen with Google, Alphabet. They're issuing stock. Meta's shopping a deal around Wall Street right now, according to people I know. You know, so basically everybody's putting stock on the market, and that is creating a lot of supply. So, you know, that also puts pressure on prices. I mean, if a company, just to make math simple, has 100 shares outstanding and is trading at $200, if it adds 10 more shares, it'll go down by 10%. It'll go from 200 to 180 just because there's more supply on the market, so the price of the share will drop. So you're getting an immense amount of supply on the market, new supply. These companies are selling pieces of their future profits. When you sell stock, that's what you're doing, in exchange to make these big investments, these hyperscalers. And now you have companies, again, as I said earlier, that are actually saying, well, they're trying to clamp down on these costs. So the question becomes, are these people making the investments? Is the reason why they're investing these billions and billions and billions of dollars, is the return on investment reason? Does that still exist? You know, does that still exist? And, you know, look, Here's what I've learned. The answer to that is we don't know yet. That's getting sussed out in the marketplace. It's a competitive, dynamic market. And basically, this is what's so cool about business. You have different sides fighting and competing so there's a war going on between different constituencies, and it's a tug of war. We want to charge more. We don't, it's a tug of war. It's just so interesting to me. It's always been. The one other thing I'll say is in bull markets in my life, actually in bear markets too, but I'll just talk about bull markets today. When you get to a new leg up, remember, what is a bull market? It's optimism outweighing pessimism. When you get a leg up, when you get to a new level in the bull market, the market pauses to catch its breath. And oftentimes during these pause informations, they're based on new information coming into the market. Like we're talking about the S&P 500, Microsoft CEO saying S&P 500 companies are pushing him to actually add cheaper models because that's scary. They're just spending too much money. They're blowing out their budgets. So, here you have this pause area where things sell off, where people say, well, maybe, it's kind of a reality check. It's like being drunk and then getting a cup of coffee, just looking around and everybody's debating, is this right? Are the returns on these big investments, do they still make sense to us? That's the conversation that's happening right now. And this conversation is happening right at the time all these Mag 7 and a bunch of other companies are issuing lots of stock. So there's a study in contrast there. So far, we've had a few of these in this tech run. And every time that I've seen one, what it's done is it absorbed the negative news, and then just pushed higher. And usually the absorption of the negative news happens because other constituents here, other people come out and say, no. We need this and we're going to pay higher. So there's a conversation. The market is having a conversation with itself. Is this return going to be worth the investment? It's having a conversation with itself. And it can't go higher or lower, really, until that conversation is resolved in a big way, in a meaningful way. I mean, it could sell off because it's just run up and it's just been crazy. But it won't break up or break down until something material changes. Because remember, even pessimists, they don't want to sell, because if you're running money on the street or whatever, and you're looking at annualized or quarterly, you're comparing yourself against quarterly other funds or whatever, you know if you miss any more upside, your investors are going to leave you. So very, very competitive. So you have every incentive maybe to sell some, take some profits, but still stick around because you don't want to miss any meat left on the bone of this rally. Anyway, more will be revealed. These stocks have had a heroic, terrific run-up, historic, really. It's one of the great run-ups I've seen and I've read about. So, it's been great. So now's the time to just sit back and let's see how this all plays out. Anyway, that's all I have. I will see you tomorrow. Have a wonderful, wonderful Wednesday.